Hello, today we're looking at cash budgets. We'll be examining question 8.1. Here is the information regarding the question. We've got details about the opening balance, information about sales, and the customer's patterns of paying for their goods. Then we've got information about our purchases, of which we pay half in the current month, and then the other half in the following month. And then some details about other costs and income that come in during the period. We've been asked to do the budgets for June, July and August. Now here I've prepared a pro forma. This is what the outline of the budget is going to look like. I've got my opening balance, 25,000, that has been brought forward. It's a closing balance at the end of May, and we're going to put it in there from the 1st of June. I'm going to put my receipts here and then my payments here. I'll add a closing balance and it will then carry forward. We'll see how these figures are created soon. We'll start with some workings. I'm going to take the information regarding sales and look at how the customers send us their money. So we're going to take 70% in the month of sale and 30% in the month following. So we're going to look at June to begin with. And so for June, sorry, we start with May, don't we? So for May, we have £65,000, of which 70% came in May. We're not interested in that. And 30% in June. We are interested in that. And 30% of 65,000 is £19,500. And then we have June. And in June we've got £95,000. 70% of that is going to be in June and 30% in July. So 70% of 95,000 is 66,500, and 30% of 95,000 is 28,500. And then we go on to July, and you can see what's happening. We keep repeating. And in July, we've got sales. We sold to our customers £105,000 worth of goods, and those customers are going to pay 70% in July, and that 70% is 73,500, and 30% in August, and 30%, 31,500. And you can see by using a table like this, you can get a clear indication of which months you actually receive the cash from your sales. Here's one I prepared earlier with exactly the same figures, all fully made up. I've added August into my table. Noticed the last, in August, 30% of 85,000 is received in September. We're not putting those figures in because they're not relevant to this question. What we can do next is we can add this all up. We can produce a total. And the total for June is 86,000. And then for July, 102,000, just adding up the figures. And then for August, 91,000. And these figures we can put into our cash budget, income from customers, and we expect income from customers of 86,000, 102,000, and 91,000. Then we move on to our purchases, and in a very similar way, we can look at the cash paid to our suppliers. We've got 50% in the month of sale and 50% in the month following. We start with May. 50% in current month, not interested in, but in 50% in June, the following month, we're definitely interested in that, and that's 50% of 60,000. In June, we have payments of 65,000. 50% of that is going to be in June, and 50% in the following month, July. And then for July, we've got 80,000, 40% in July, and 40% in August. I've done a completed table here below. We finished it off with the last month with 55,000, of which 50% is received in August. And we can add those up. We can do some totals. And if we add them up, we've got 62,500 payments out, cash moving out of the business in June, 72,500 in July, 67,500 in August. And those figures then we can put into our cash flow forecast. So we've got payments to suppliers, and our payments to suppliers, just put in those figures from our workings. And I would always cross-reference to my workings so that the examiner can see where my figures came from. Every time I create a new figure, I need to have a working, so that in case I make any silly mistakes, that anybody marking an exam paper can see exactly where those figures came from and what sort of mistake was it. Was it just an arithmetic mistake, or was it an error of understanding? Those are the two main calculations I need to do for this cash budget. I then need to read through the rest of the information on the question and pick out key figures. And that in this question is right at the end, starting with the paragraph wages are 8,000 per month. So I'm going to put my wages in here, and it's 8,000 a month. And then the question says overheads are £17,000 per month, but that includes £4,000 depreciation. And as you should know, depreciation is not a cash payment, it's not a cash expense, it's an accounting expense. So we're going to put in our overheads, and we're going to put our 17,000 minus the 4,000, and that will be 13,000. The question then goes on to talk about there's tax payment. So the tax will be a payment that has to be paid in July. You haven't really studied tax yet, but you don't need to worry. All it is, it's a payment. You just do as you're told. Tax of 35,000 has to be paid in July. So I'm going to put my payment of 35,000 in July. And then finally, the organisation will receive, that's the key thing, they will receive a loan repayment of 12,500 in August. So we have a loan receipt, that's money back, and it's in August, 12,500. Now I can add up my total receipts. And my total payments. And now I'm ready to finish off my cash budget. I've got an opening balance of 25,000. I'm going to add to that the money coming in June of £86,000, and then take off my June payments of 83,500, which will give me a closing balance of £27,500. The closing balance at the end of June is the opening balance at the beginning of July, and I just repeat the process, adding in my receipts, taking off the payments, and that will give me a closing balance at the end of the month of £1,000. That's the opening balance at the start of August, and that will give me a closing balance of £16,000. And there we've prepared the cash budget. Now, along with the preparation of a cash budget, in other questions you may be asked to analyse what these figures mean, and if there's any pinch points. Note, there's a little pinch point here, £1,000. We're getting quite low, the cash coming in at the end of the month. And if any of these timings change, because this is a budget, it's an estimation, if any of these timings changed, there could be a slight problem, and we could be getting towards having no money to pay our day-to-day expenses. Now, since in this case we're not actually falling into an overdraft, it may be prudent for the business to consider having an overdraft facility with the bank, or having a small short-term loan, or deciding to change things a little bit. Maybe pay some of our suppliers a little bit later. So instead of paying 50% and 50%, pay 40% and 60%, and that would delay some of the payments. And you could do that for a short term, hopefully without disgruntling your suppliers too much, but in the long term you would need to negotiate. Thank you very much for listening.